Hello, everybody. Before we jump into today's episode, we have two sponsors we want to say thank you to for supporting this show. The first one is Routine. You guys have heard me talk about Routine, honestly, back from the early days of the podcast, and it's still a product I use every single morning. They have a prompt for me here. I'm going to do a little impromptu on this ad read today because honestly, this is a product that I truly believe in. And so I'm just going to tell you guys exactly what I think and why. First and foremost, this is a stat that they shared, but when you sleep, you lose between a pound and a pound and a half of water. And most of that's just sweating while you sleep. I used to not know if that was actually true, to be honest. I felt like a pound to a pound and a half of water seemed like quite a bit while I slept. But the one thing I did constantly pay attention to when I started using Routine was just the fact that before using Routine, I always felt a little dehydrated in the morning. And I'm one of those people that when I get up really early usually. I work out. One of the first things I do is some form of fitness. It's just like what I do before everyone's awake. And so it's very easy for me to grab a coffee, pre-workout, an energy drink, something with caffeine in it, and just go. When I am good about using Routine, first, I basically they come in these little single serve packets. They contain half an organic lemon, a tablespoon of apple cider vinegar, Himalayan sea salt, all 6 essential electrolytes, and they have no sugar in them at all. A lot of hydration products are going to have sugar. So one of the things about Routine that I love is that there's no sugar in there. So when I am good about doing this consistently, I will take one of those single serve packets, I'll throw it in my mixer bottle, and whether I also put in a pre-workout or something with caffeine or I just drink that separately, I try to drink that first. And the days I do that, I do genuinely feel hydrated and just have a different form of clarity all morning. A lot of people have tried to make their own homemade versions of Routine, right? You see people they take a shot of the apple cider vinegar, they put a little sea salt, a little lemon in a drink. This is essentially that, but in a product that you can take with you on the go, have it ready for you first thing in the morning. I know me personally, when I'm groggy rolling out of bed, the last thing I want to do is, squeeze a lemon, cut lemons up, go get the apple cider vinegar, find my sea salt. I just rip this packet open, throw it in my water, drink it, and it's good to go. You can try yours today. If you haven't tried it yet and you've been listening to this podcast for years, just try the damn Routine. Give it a shot. You can use code ShaneWhite30 and get 30% off your first order. So you get 30% off by using code ShaneWhite30 and go to yourroutine.com. To make it even easier, I've added the link to yourroutine.com in the show notes. So just click on the show notes for this episode, click on the link to yourroutine.com, and don't forget to use code ShaneWhite30. All right, guys, today's episode is also brought to you by NeuroRoast. Again, I'm going to go a little off script here. NeuroRoast is a product that I also came across during this year of 2023. They are a coffee company that's helping you optimize your brain function and overall well-being. This is another product that, to be honest with you, when I first started working with it, I was a little on the fence. I was like, do I really want to have mushrooms in my coffee? Well, folks, I will tell you, when I use NeuroRoast, one of the things that has stood out to me the most is I'll back up. People that know me know that I have way too much caffeine, typically. One of the things this year I've done a good job of is cutting out alcohol. Not completely, but predominantly, I don't touch a lot of alcohol anymore. What I think I've actually done the other way, though, is add a lot more caffeine. So I do definitely drink too much caffeine. That's something I need to work on next year, is just trying to minimize how much of that. But NeuroRoast is something that has actually helped me because of the way they've formulated their coffee. Like, unlike regular coffee, which is, still something I consume, but NeuroRoast specifically doesn't cause jitters or crashes. Mushroom coffee provides a more balanced and sustained energy, allowing you to stay focused and productive throughout the day. So the times I do use NeuroRoast, I'll be honest, I just don't feel that jittery, like, I'm jumping out of my chair or standing here at my desk jumping around feeling. So give NeuroRoast a try. They have some really good flavors. I'll be honest too, the two guys that started NeuroRoast are just really good dudes based out of New York, and they're hustling, and hopefully they can get some people to try NeuroRoast this holiday season by listening to this podcast. So for you folks who've been on the fence, I'm telling you, it tastes delicious. They've done a fantastic job of making this coffee not only be functional, but taste fantastic. And if you want to try NeuroRoast, you can use code ShaneWhite. So it's super simple, just ShaneWhite at checkout. you'll also get 30% off. So if you go to neuroroast.com, and once again, I have added that to the show notes. So just click into the show notes while you're listening to this episode. You can click on NeuroRoast link directly. Don't forget to use code just Shane White, and you'll get 30% off your order. Hope you guys love both these products. I'm trying to not only bring you guys products that I use, but that I believe in on the podcast. I'm not taking ad reads for any brands that I don't really believe in. So anyway, hope you guys love both those products, yourroutine.com and neuroroast.com. I've added those links to the show notes. Hope you guys love it. And I got an awesome guest coming up right after this. All right, everybody. Welcome to another episode of the Shane White Show. I am pumped today to have Mike Warren on the podcast. He is the CEO and founder of Alethia Strategic Business Solutions, as well as the founder and managing partner of Alethia Venture Partners, which is one of the big reasons I wanted to have you on today, Mike. For everyone listening, would you mind just giving everyone a little bit of an intro into you and what you do?
Wow. Okay. Well, first, thank you for having me on. I really appreciate it. It goes back a very long way to birth. Quite honestly, I'm 55, and I have been in the CPG space literally since I was born. My dad was a buyer for 46 years for two major grocery chains in California. One being
Cool.
Alpha Beta Markets for 20 plus years, and then Certified Grocers, which is now Unified Grocers. And he was the tobacco, alcohol, and candy buyer.
Wow,
So,
what a combo.
Dude, you have no idea. Like, you could imagine what was in my house and in my garage when I was growing up. You know, it was booze and, chewing tobacco and smokes and all the candy products you could imagine. And so, I was very popular in the neighborhood as well as the schoolyard because, every day I would take I'd take a briefcase filled with candy and like beef jerky products and anything I could get in there, and I would sell. I was 10 years old. I was rolling around the playground with $20 in my pocket, and it was cool. My dad had a huge influence on me, and I learned the bev space, I learned the CPG space very, very, very early in life, and spent a lot of my summers between traveling, with my parents to Europe and things like that because I'm Greek. We would also go to Napa and Sonoma and all the great wine regions. And my dad was very close to the Jamaras and the Wente brothers and Paul Masson and all the big producers. And so my brother and I used to get to play in the chateaus and the vineyards when we were kids, and I learned. In fact, I learned a couple of weeks ago talking to my dad. He's like, yeah, I think your first sip of wine and champagne was when you were about 11 years old, running around, through some
in
of
Napa, nonetheless, though.
Yeah, it was really cool. So I got to see a lot of manufacturing, different types of manufacturing plants, from water to candy. I mean, you name it. We just traveled, and it was very cool being in that environment. And so, progressing through my life, I got to be around 15, and my dad helped my brother and I start a business in the CPG space, working in the warehouses, taking salvaged, damaged goods, repacking it, and getting it back into distribution for the retailers. And I did that for several years and ended up selling that business. That was my first company that I sold when I was around 28 years old.
Wow,
and
good
that
for you.
really kind of launched, me going into the securities industry. So during that time, I'd worked for every broker from Bromar to Bradshaw, Advantage Sales Marketing, you name it, nationwide brokers. But I'd also worked for many manufacturers like Coca-Cola, Kingsford Charcoal, McCormick Schilling, several beverage companies along the way, a lot of Gatorade products. So I'd seen everything from frozen foods all the way to everything else, canned goods in the stores. And I had a couple stints with Sunshine Biscuits, Dow Corporation, Japanese company called Daily Foods doing frozen stuff. So I had been in the space, literally, my whole life. And then when I sold that company, I decided to go into the securities industry, where I went to work for a couple of Fortune 500 companies, American Express, Prudential, New England Financial. Then ultimately, I ended up in my own shop, doing my own financial services. Joined a broker dealer with a partner of mine. We took a bunch of companies public, a bunch of companies private. Several of those were still in the CPG space. So I had a tequila company, a mango rum liqueur company, coffee company, sports energy drink. We also had some nano products, and then we had a dessert company as well. So I always kind of stuck around the CPG space. And even though I was in the investment banking world and doing deals, no matter what, I just kept getting sucked into it. Everybody was like, "Hey, you've done this and that in the business. Can you help us scale? Can you give us strategy? Can you work with our teams?" And I just kept getting sucked in. So ultimately, when I finally decided to get out of being a licensed individual, which is always an issue when you've got the SEC and FINRA and you're running firms, I just got tired of that, and I exited about 5 years ago. Decided to go into private equity. Figured out I was unemployable at that point in my life. Like I fit in with a lot of people, but I'm not an employee anymore, and I haven't been for a long time. So I really wanted to just invest in companies and in advice forums, sit on boards, do advisory work, and so I spent a couple of years in private equity, and I figured out I hate it. I don't want to own anybody's business. I don't want to manage anybody's business. I don't want to run anybody's business. So in private equity was not for me. And about a year ago, I decided, you know what, I'm going to do a fund. It actually was about a year and a half ago, but it took me a little while to, kind of move through the cycle of it. And so I really started working on the fund piece around March or April of last year. And I said, hey, where am I going to get the most bang for my buck? And I love beverage, and I love anything that supports beverage, both on the non-alc side and the alc side. And I love media tech that also supports beverage. And I love fintech that supports beverage. So, those are all my backgrounds. And it was just a very natural transition for me to go from just being an investor, being an advisor, coaching people for 20 plus years, to going and saying, hey, you know what, I'm going to start finding brands, and I'm going to start investing in them, and we're going to help them along the way, and get some exits in 3 to 5 years, and really accelerate the bev space, and that's what we're doing. And I love it. So I know that was long winded. I apologize to everybody listening, but yeah, this has been my life for 55 going on 56 years now. I love this space. I love CPG. It's almost bomb proof in any kind of market. And I know what the statistics say about how many products are out there, but I really believe that, people are not going to stop drinking, whether it's alcohol or non-alc. And there's going to be new products coming on the market, and we like to be the forefront of finding those brands, and not only helping them come to market, but getting them to an exit stage as well.
No, I love that, Mike.
Yeah.
Thanks for giving that background.
Yeah.
It was funny because as I was doing my research before we did this recording today, I was like, well, holy smokes! Like Mike has done a lot of cool stuff. So that was really a good overview for everyone listening, because my takeaway was like, holy shit, this guy's done so many different things. I would love to hear the story of how he got to where he is. So Mike, you've been in the industry for a long time. You've obviously been in CPG. Just walk through that. Why do you think where you are now and starting this fund, do you think this was just the right time, right place to do so? It's interesting because before we started recording, the reason I'm asking this question to kick things off is, as we both know, the fundraising space has been really tough over the last, 12 to 18 months for a lot of CPG brands. And I've seen that too. So for you, did you think it was more of an opportunity? Like you think you can come in and help brands from that angle, or was it just for you as part of your career journey, you were excited to jump in and really run a fund?
That's a great question. And I've thought about that a lot, especially over the last 6 months, because fundraising has been a challenge, not only for the brands themselves, but it's been a challenge for funds as well. I'm very close with a few other funds in this space, primarily Bev funds, and they've had a hard time too. And so, when I've thought about timing, is there ever a good time to start anything? Honestly, like, you just got to jump in. The economy may be bad, the product may need some work. Interest rates might be where they're at. Every category of Bev, from alc to non-alc, is different. Tequila is different from rum. Rum's different from gin. Gin's right. You go through these cycles. So, tequila has been very hot. Whiskey is getting even hotter right now. Gin is on its way up. So, trying to time the market for when to start a fund or when to invest, as a very disciplined investor over the last 25 years of my life running broker dealers and investment banks and things like that. We've always touted to people, don't try and time your investments. Just get in there and systematically invest and find the right mixture of investments, right? So a fund like ours is an alternative investment. It's a choice. It's not a necessity. We're not creating income for people. We're taking chances and swinging, sometimes for the fences, and sometimes just trying to hit singles, right? And the timing for me was, I was getting to the end of really spending a lot of time doing a lot of coaching, executive coaching, which I've been doing for like I said, 20 plus years. And I just got to the point where I wanted to coach companies that I owned a piece of, instead of coaching companies where they pay me a bunch of money, they get me for a certain amount of time, and then I leave them, and they either do better, hopefully, or they ride off in the sunset and sell or whatever. But I never had any equity in them. And a lot of those companies, if you look on my website, they're Fortune 50 to 1,000. Those guys aren't going to give me pieces of their company and let me grow them. Yes, I've sat on a lot of boards. I've sat on a lot of advisory boards. I've gotten stock for compensation, but I've never been in a position where I've been able to invest and then really help shape the company itself on a magnitude of multi companies. So when I really started thinking about the fund, I wanted more excitement in my life. I wanted to reinvent myself again. I guess you could call it Mike Warren's midlife crisis. But instead of going out and buying the Porsche and and the boat and all that stuff, I was like, man, I've had the boat, I've had the Porsche, I've had all that crap. Like, it doesn't matter to me. I want to do something meaningful in my life. I want to leave some legacy, things to my daughter, and the people I care about. And the only way to do that is you got to build wealth, and you got to build it from the inside out. And the only way to do that is you either start it yourself, you invest in it, or you inherit it. That's really what it comes down to. And so I got to this point in my life, I was like, damn, man, like, what do I do? I'm tired of coaching. I've been investing, but I'm not investing at a level where I have any real control over the outcome, other than, giving them enough money to keep going. And that wasn't enough for me. I wasn't satisfied with that. And that's what it was. And so, yeah, we entered the market in a really, shitty time, honestly. Like, interest rates going up, inflation through the roof, unemployment, you could talk politically on whichever side you want. But it's been a daunting time in our history to raise capital, right? And so, could I have picked a better time, like 21 and 22, when money was pouring into funds and pouring into products? Maybe. But here's what I've seen from a lot of those companies now, where they poured a lot of money in. Now they're doing down rounds. They can't find money. They're not operating profitably. They're still raising capital to try and raise capital to profitability. And a lot of those companies are flailing, which is where you're seeing a lot of people coming back going, man, I need more money, need more money, need more money. And there's no more money for them to get right now. So a lot of those companies are failing and they're going to go out of business. So I think it's always better to invest at the bottom than invest at the top. And 21 and 22, we saw valuations screaming and we saw money pouring in. And so a lot of people were putting money in at the top. And now a lot of those companies are coming back going, man, we need more money. And there's no more money to give them. Had they scaled slower or taken less money and been better at operating and getting better to a point of profitability, they wouldn't be in these positions right now. So I think I entered the market, believe it or not, probably at the best time for finding great brands, opposed to not having enough money going through the market. That will shake itself out no matter what. That it always does. It always has. I'm not afraid of that market. I'm not afraid to have to talk to 10 more people than I ever had to raise capital. I'll have those conversations all day long. I'm more worried that I'm picking the right companies that have the right operators so that when I do give them money that took me 10x to get, that they're going to know what to do with it. We're going to be able to help shape that for them, and they're going to have a really good exit from it, and our investors are going to make a lot of money. I mean, that's really what it comes down to. So, yeah, I mean, going back to the original, man, I was having a midlife crisis of what I was having. I was like, shit, what do I do with myself? Honestly, like, I was like, I'm right at this weird place, at the time I was 54, thinking about it. And yeah, I was just like, let's do something crazy, man.
I like
let's go find some people that are equally as crazy, or if not crazier than I am, to join me on this journey. My team, and they're crazy mother effers, man. I'll tell you. But they're great. And so yeah, it was a Mike Warren moment. And
no, it makes sense. I mean, Mike, I can feel the passion from what you're doing now, which is super cool. I mean, I know everything you just said is something that, me and my co-founder, with what we're doing, we see and hear and feel it for sure. Just, it's been such a shift. And I used to say 6 months. Now it's really been like 12 plus of, man, so many brands were just top line. And I remember vividly having conversations being like, well, what about the bottom line? Like, are we focused on this? Are we not worried about it? Because me wearing my finance hat, I'm like, I couldn't run a business like that. It'd be tough for me to understand. So to hear what you're saying, I've seen it on the ground as well. It's been such a shift, and it's really interesting. I think you're coming in at a time, personally, I have a feeling 2024, no matter what happens with all these macroeconomic things and the election, I have a feeling 2024 is going to be a huge opportunity year, like a huge year to deploy capital. I don't know why. It's like everything I'm seeing, everything I'm hearing, everything I'm reading, all the numbers within Amazon that I work with, it's all pointing to this should be just a mass. We'll look back on 2024. I think 2023 was a huge year of some people going out of business, a lot of people trying to recalibrate their businesses. But I think 2024 is going to be a springboard into a lot of really strong growing companies.
I couldn't agree more. People ask me all the time, and I think if you looked in my LinkedIn and into my resume, I spent 5 years teaching at the university level, and I taught strategy and strategic economics, and I really, I followed trends in the CPG in every market out there. And with the environment we have right now, interest rates being where they're at, people don't have to invest money. Okay,
right.
They don't have to deploy. A guy who has $100 million in his bank can collect on a laddered bond strategy, could get 8.5%, 9% if they really know what they're doing, right?
Mm-hmm.
So you're talking $100 million, and this guy is generating what, 8, 9, 10 million a year off that money right now. That guy doesn't need to deploy capital. That guy can sit and wait till the world either falls apart or they start seeing the trends coming up. Well, we know that interest rates have to come down this year at some point. I don't care if it's March or June or whenever it is, but we're in an election year, number one.
Right.
We've got a administration that wants to retain the office. If interest rates stay where they're at, number one, there won't be anybody putting money into alternative investments because they don't have to, which is not going to help the economy whatsoever. It's not going to drive inflation down at all. And I don't care how much they raise the interest rates, we haven't seen inflation move. Let's get real, right?
Right.
So they have to increase the flow of money back into the economy, and the only way to do that is to lower interest rates. And once you do that, you're going to get all these sideline people off the sidelines because they're going to need to invest in alternative investments where they can get higher rates of return, where they're not getting it in their money market account, their checking account, their Schwab account, their Merrill Lynch. I don't care what it is, where you're getting all these preferred rates. So I see, what I'm really looking at, I think Q2 is going to be the start of money flowing back in. Q3 is really going to take off, but where you're going to see the economic benefit is going to be middle of 2025. That's what I see. So you got to get your money moving now.
Mm-hmm.
You got to get it working now. If you don't get it working now, you're going to end up starting to get that money moving third quarter, and everybody kind of dies in the fourth quarter and waits till the first quarter. Now you're not looking at having any money moving until 2026, right?
Okay.
And
right.
a lot of the companies that we're investing in right now, they're months away from profitability. So we're not just ramping them up and giving them money so that they can stay in business. We're giving them money strategically so that they're going to be profitable, at the very least in middle of 2025, but many of those companies are going to be profitable this year. And that tells me that we're picking people that are good operators or great operators. They've got some great products, and that our advisement and the money that we're giving them is going to a place that's going to help them get to profitability. Because this year, if you don't work towards profitability, I don't care what you do, 2025, you're going to be either looking for money or looking for a job. Period.
Yeah, it makes a lot of sense. Yeah, I mean, for you, I mean, you must hear a lot of pitches. You must talk to a lot of brands, I'm assuming, right? I'm sure it's all the time.
Weekly.
If you had a guess, just to throw a number out there, how many of those brands that you think you talk to, like if you had to put all those on a piece of paper for week to week on average, how many of those do you think now in the last 30 days have you talked to that are either profitable or have a clear line of sight in the next quarter or two to be profitable? Like, what is it, a very high percentage at this point?
5%.
Wow. Okay, so it's still really low.
Well, you got a lot of people who are putting performas together that are built on air. Okay,
Sure.
where they're like, oh, year one, we're going to do $1 million. Where year one in the bev space, you're lucky if you do 500, you might get 250 out there, right? You got to really get into distribution. But let's be honest, just because you get into distribution doesn't mean you have any pull through. It doesn't mean that you've got actual sales. You're just filling the pipeline right now, right? So your first year numbers to me are usually bullshit. When I look at them, I'm like, okay, great. You did 500. Let's see what you did in year two. And if I see velocity going, I see things moving, and listen, we have some brands that aren't even there yet. They're still in year one. But if I see some trajectory in year two, or we've got some companies that have been around 3, 4, 5, 7, 8, 9 years now. One that we've got that's 10 years into it right now. And I'm watching velocity go up, and I'm seeing how they spend money, and I'm looking at their performance, both the ones that they've come up with lately and the ones that they had 3 years ago when they were formulating. And I look to see, were they realistic? I have one company that came to me and said, hey, we're going to do $1 million this year, and next year we're going to do 29 million. And I looked at him and was like, where is it? Is it going to fall out of the sky? Like, show me the plan.
Right.
And they had this incredibly robust, amazingly perfect performa that they must have spent 20 grand with some, crazy CPA, CFO, doing projections for them. That looked so good on paper, but the reality was complete horse shit. Like, really? Like, there's no way you're going to get into, you're going to go from 1,000 doors to 30,000 doors in a year. It's not going to happen. You don't have enough money in the bank to do it. So I look for reality, right? Like, I'm looking for, are these people sane? That's number one, right?
Mm-hmm.
And so a lot of the brands that have come to me, let's call it since November, 5% of those people actually have a real plan for success. The rest of them are very pie in the sky, products that look the same, feel the same, taste the same as 30 other products that are on the market. And we're a fund that looks for premium products, things that differentiate. I could tell you 5 of our brands right now there's nothing else in the market like it.
Okay.
and there's going to be no real competition for them just because of how good the product is, how great the marketing is, the people behind it, the money that's gone into it. They've got some major competitive advantages. So when I see decks and I see 20 or 30 of them a week, and I will, before this month, I was seeing 15, I was taking 15 meetings a week with new brands just to get an idea what was out there in the marketplace. And there are very few that were, really put together. I mean, all put together. I mean, a lot of people show good at first, but I've learned over the years that you can't rush into anything. So some of the brands that we're just now engaging, we've been in talks with them for 6, 7, 8 months. I've
Okay.
wanted to sit back and see how they've operated, both when they're a little desperate or when they're in a really good position. And I think we picked some amazing winners that we're going down the road with. But for the most part, man, like, there's a lot of crap out there right now. I mean, it's a junk filled space because there is no barrier to entry in the booze space or even in the non booze space. I mean, anybody can go to a co-packer who is also a formulator and
Mm-hmm.
has an art department, and next thing you know, they got the next greatest vodka drink, right?
Sure. Okay. Yeah.
I mean,
Right. Right. Right.
it's
Right.
that
Right.
easy. It's that easy. You can go and get whiskey that's been aged for 8, 10, 12 years and buy those barrels and make your own whiskey and slap your own label. It's so easy to get in this market, and I think people have gotten this allure that that Ryan Reynolds makes $600 million off his gin, and and this and that. And all these people get these giant exits and they think it's easy, but it's not. This is, in my opinion, from working in the grocery and retail space and CPG almost my entire life, beverage is one of the hardest categories in the store, no matter what. And it's one of the most competitive for shelf space too. It
Yeah.
costs the
Sure.
most. It's the most highly sought after. That's why Coca-Cola and Pepsi and Budweiser and Coors. That's why they own all the shelf space,
Right.
right?
Right. Right.
They've dominated it and paid for it, and breaking into that is very difficult.
Yeah. I
And
mean, yeah.
it's got to be, I mean, it takes a strong will and an iron stomach and a shitload of sleepless nights to create a brand that really takes off. And the founders that I see out there that have figured it out, man, they'll all tell you the same thing. Like, they don't sleep at night. They work 16-hour days. There's no days off. There's no vacations. There's no family time. Like, it's rough. And until you get that exit or you're damn close to it, guess what? You're in it. You're in the
Mm-hmm.
fire till the bitter end. And so I'm looking for those people that are super highly resilient, whether they come from a marketing background or a finance background or a beverage background. It doesn't matter. Like, just because you've been successful once in this business does not mean you're going to have it again. And just because you haven't had success and you haven't been in this business doesn't mean you're not going to be successful either.
I like that. That's a good point too.
It's
Yeah.
true. It's
Sometimes,
true.
yeah, because I was gonna say I feel like what's interesting. I'll build on what you said because I do see a lot of it too. It seems like I remember I started this podcast in 2020, like right when COVID kind of kicked off, and I was at home and I had all this extra time. And I did have a couple early beverage brands on, and I remember back then even, Mike, it was like the conversation was so much around how complicated and difficult it was to get a product to market. And you fast forward now to 2024, basically almost to the date, 4 years after I started this. And it's kind of remarkable how, I don't want to say easy, but to your point, it's what you said. And I do agree now that I'm thinking about it. Like, the barrier to entry to bring something new in beverage is wild. But what I don't understand, Mike, and you're closer to this than I would be, if I look at any CPG category, maybe the barrier to entry to get a product designed, created, and ready to sell is one of the easiest. But it's so much more expensive to distribute, right? It's heavy. It's not the right, like, even for e-com, it's a harder product. You have to really get throughput quick. So why do you think there's so many new beverage brands? If you were to guess, obviously this is your bread and butter, but it just seems like, yeah, the barrier to entry is low. But after that, unless people just are a little bit naive on what it takes to get a beverage brand distributed. It's been a puzzling thing to me, because I feel like there's been so much in the beverage space. Like, and I know I'm rambling here a little bit, but me and my co-founder, when we went to Expo West last year, I mean, our biggest takeaway last year out of anything we saw, our number one takeaway when we came home was the non-alcoholic space. Like, how many new products there were. It was incredible. And there was a lot of really good ones, honestly.
Yeah.
But I'd be
Colas,
curious your thoughts.
beers. I've seen 5 new entrants in the cola space. 2 that I really love. I've seen 5 different beers come online. One that I just think is absolutely the next front runner to athletic brewing. But to go back to your question, so there's 2 things, right? The first one is COVID gave a lot of people a lot of opportunity. Okay, it certainly hurt retailers for a while. It hurt supply chain. But what it didn't hurt was the DTC, the direct to consumer market. And the direct to consumer market shined when, COVID hit, because obviously we were in lockdown. You couldn't go get toilet paper, whatever. But man, you could get booze delivered to your house.
Right.
You could get beverage delivered to your house. And a lot of things that people were buying, they were like, man, this doesn't taste very good, or I can do this better, right? So that barrier to entry during the COVID time was easy because everybody's shipping, DTC, right? Direct to consumer. We've seen direct to consumer slow down considerably in the last year. Why? Because every retailer's opening up again. You got people on the streets. You got people going to restaurants again. You got points of distribution that did not exist during COVID, right? So the barrier to entry was even lower during that time. And so a lot of people banked on the fact that that would continue going. Well, that has not continued going. And even DTC is a hard road now because the cost of acquisition is much higher than it was 3 years ago.
Sure.
It's way higher. And as a digital marketer, right, that your COA is totally different than it was 3 years ago. The bev space is the same. Shipping is more expensive. So that product that's on the shelf for $11 that you want delivered to your house now costs you $18, right? That's a tough pill for people to swallow unless you're confined to your house or you're just so rich or so lazy you can't get up and go to the store, right?
Yeah, right.
Which there's a lot of people like that, right?
Sure.
But for most consumers, that space, is dwindling. People want to get out. They want to go shopping. I see more people at the grocery store than I do in restaurants around me now, because people they want to congregate. I go to the Whole Foods down the street from me, and you can't get a cart down the aisle anymore. There's so many people shopping.
Oh, wow. Okay.
At all hours of the day, right? So the retailers know that space is more valuable now. So you've got the convergence where, DTC is starting to dwindle a little bit, but then you have the retailers that are getting all this business. So the retailers can charge more for their slotting allowances, for the placement in the stores. They can charge you more for advertising, more for demoing, more for placement, more for anything. So now you need more money to enter the retail space. The direct to consumer is slowing down a little bit. It's not dead. It never will be, but it is slowing down a little bit. So you need different channels, right? Amazon's a great channel. Walmart's a great channel. One of our brands, NBTV, another great channel. Amazon meets QVC on online. You can order the product while you're watching TV, right?
Right. Yeah.
I mean, there's some great stuff going on, but it was so much easier during COVID to launch a product. And I think we're now getting the catch up of all the people that tried to launch during that time that are now going, oh, crap, I really need money now. Oh, crap, I can't get distribution now. Oh, man, Molson Coors and Budweiser take up 85% of the shelf space in the cold box. How am I going to get my product in the cold box when it needs to be refrigerated? Right? But they can't do it. So what are they doing? They're going to try and partnering up with Molson or Budweiser to get distribution. And now those guys, they're making bank off it because they're like, we'll peel a little little sliver off our cold box
Sure.
for you.
Yeah,
But
they see
guess
an
what? It's going to
opportunity.
cost you this and this and this and this.
Right.
So there's a shift, and listen, these all go in waves, right? I mean, retail is a wavy market. The places where you're gonna have the hardest time is in Bev and probably the cereal aisle. I mean, quite honestly, how many new cereals have you seen? How many new Captain Crunches have you seen come out in the last 30 years? Right?
Oh, yeah, for sure. I mean, the
Yeah.
cereal aisle is such a funny one that you hit on. I mean, we were at when RX Bar got acquired by Kellogg. Like I spent a good 6-7 months like actually in the Kellogg organization before we
Yeah.
left and started Noble, and it was wild to me. Like just the conversations that were being had. I mean, again, it was Walmart and Kellogg. It's like their CEOs are a phone call away, and
Right.
if Walmart wants something, Kellogg's like, okay, how, you know what I mean? It's like when I was there and sitting in and hearing how these conversations work for the biggest cereal brands, I'm like, well, yeah, no wonder it's so hard for brands to break out. Being a novice and like only seeing the RX success story,
Yeah.
you're like, man, if you're, all these other small food and beverage brands, like, wow, it's such an uphill battle when it comes to the huge. I mean, these big CPG brands have had 100 years to build up space and take up real estate. It's wild.
100%, man. 100%. I mean, so you look at it in the let's just let's take that cereal space for a second. Let's transfer it to the Bev space. Who's on those shelves, right? You got Pernod Ricard, you got Bacardi, you've got Constellation, you got Diageo, you got Molson Coors, you got Budweiser, you've got 7 or 8 big guys that own everything, right? And
Right.
so the little guys trying to get in there, and then they're going for distribution at Southerns or Breakthrough or Empire, whoever they're going through. And these guys are the feeders, right? But they're no longer working your product. So the distributors no longer work the product. So the retailer doesn't really care how many people come in as long as they're paying and how
Mm,
many people they discontinue because they know that there's a line wrapped around the building 75 times of people that will jump in that space and pay for it, right?
sure.
So,
Yeah. Yeah.
so the
Yeah.
distributors and the big retailers and those 8 or 9 companies out there, they've got a lock on it. So you have to go out. I attribute it. I equate it to the record industry, right? It used to be Warner and Sony and all these big ones, right? And they'd go out and sign an act, and then they would develop that act for 8, 9, 10 years, and then they'd break them out and turn them into stars. Record companies don't do that anymore. That's what indie labels are for. That's what you going and getting your music on Spotify is for. That's what building up your following is for, because those big record labels are not going to take you anymore. They're going to
Mm,
buy you from a smaller label. And for you to get on a smaller label, you've got to go through the minor leagues, right?
okay. Sure.
Beverage is exactly the same way. You have to go through the minor leagues. You got to start your brand. You got to get your distribution, whether it's on premise or off premise. You got to work that product. You got to get into a distributor. You got to get the distributor to try and get you into the states or areas you want. You got to hire a sales team to work that because the distributors are not going to before you're ever going to get into the eyes of a Constellation or a Pernod Ricard or a Bacardi or anybody who's going to even remotely want to buy you. You got to
Mm,
go from the grassroots through the indie leagues all the way up to the majors, and it just takes time, and you got to operate right. I mean, we've got a couple breakout brands that, I mean, quite frankly, we got 2 brands right now that are they could easily be sold in 3 years, and they're just getting started because they just have it. They have the it factor, and we're gonna have some major exits with these brands because we've already been approached by many of the majors to buy them out before we've even gotten started, just based on who's involved and what the distribution contracts look like.
oh, wow.
So
Okay.
yeah, and it's just a matter of pouring a little, sugar and a little cream into the coffee and stirring and drinking. It's that easy for a couple of them, but for everybody else, man, you got to work your ass off. You have to operate right. You have to manage your cash flow. You got to manage your people. You got to manage your spend. You got to manage your marketing budget. You got to know where to put that money, right? Like you got to know if let's say Breakthrough says, "Hey man, we'll give you 40 state distribution," right? Well, if you're a new brand, 40 state distribution doesn't do a damn thing for you. In fact, it can actually derail you because in your mind you're thinking, "Holy shit, I've got 40 states. I'm going to fill 40 states up." Well, then you go down and you start playing with the pencil and you start, doing addition and subtraction, you're like, holy shit, I need $25 million to penetrate 40 states, right?
Sure. Oh yeah.
But here's the problem, Shane. Some of these people, they think they can actually do that. So they go out and they try and do these massive raises. And when they get to me after they failed on doing those massive raises, I'm like, well, your plan's all screwed up. Like you've been too ambitious with your dreams. Pick one state, maybe pick one county, one area, and penetrate that, right? And again, go back to the music industry, right? Every great band starts out as what? A local band. There's no band that gets together and starts touring the world in their first
and hoping that they get sellout places everywhere. It
never
wouldn't happen,
right?
right? That's a good
You got to
analogy.
start locally, and then you got to start building regionally, and then you got to start touring your state, and then your coast and your region, right? It's identical, man.
That's a really good analogy.
It's the one that and I'm only saying this because I worked in the record industry for a little while. I worked with some of the big labels, and I also worked with a few indie labels as well as I still consult and coach for Sony and Fremantle and some big companies in the entertainment space. And one of our GP partners, his wife is head of production for North America for all of Netflix. So
oh wow, very cool.
We really know the music and the entertainment space really well. And yeah, it's identical, man. It's the same path.
So for you, Mike, I mean, obviously you have an immense amount of knowledge and you've seen how this can and can't work. Are there, like we said, beverage has been a space I've been super interested in because it just seems like it's exploding. There's so many brands that are trying to attack different aspects of it. Are there a few key, I would almost call them like subcategories in beverage right now that you're like, this is just such a prime opportunity? So like the opposite of the cereal aisle. I don't know if there's anything that like jumps out to you, obviously from non-alc to alc, there's a lot there, but if there's a couple subcategories, anyone listening that's, working on an idea that Mike is excited about.
I think gin is the next up and comer breakthrough in the spirits category from just whether, listen, vodka is very played out. There's still room, believe it or not, with as many tequila brands as there are out there. Tequila is still moving, and I see a lot of tequila deals, and I've got two in particular that I've got my eye on that I've had several meetings with that we are very interested. They're very interested. But gin and whiskey, I mean, even whiskey right now, bourbon and just whiskey in general is coming up. You're seeing more Japanese whiskeys hit the market. You're seeing more American whiskeys hit the market, but you're not seeing the premium ones. The old true and tried ones of the Wellers and this Sarzaks and all of those lines that are out there. Not a lot of people have been able to crack that, but there are a few whiskey brands that are starting to come up, and I think whiskey is going to be a big one. But man, I love the gin market. There is no premium gin here in the United States.
Oh, okay. I didn't know that.
Yeah. I mean, you've got Hendrix, you got Bombay, you've got, Monkey, you got the normal players, but there's no real premium gin out there. Like, if you look at Clase Azul selling bottles for $300 to $2,500, right? You don't have that in the gin market. There's no $300 bottle of gin that's on the shelf of your restaurant right now, right? There's no $100 bottle of gin up there because all of those gins taste the same. And so there are some new gin entrants into the marketplace. One in particular that's going to hit the U.S. in the next 6 months. That is in Europe right now. It's going to be a blockbuster. I mean, it really is. And I think that them coming into the market is going to open up a whole new premium market for other gins to come in, but they're going to already be down the line quite a bit in that category. So I think that's a good one. But, if you want to go to the non-alc side, there's a few different ones out there that are really good. Brands that we're involved in. Haywell is one of them. Bear's Fruit is another one. Key is another one. They're in the ketone space, so there's no caffeine in it. The other one is Berry Organics. This is the alternative that's crushing Pedialyte right now, and and Pedialyte is losing market share daily to them.
Oh, wow.
Those are a few of the great brands. We just have, and I'm naming them not only because we're investing in them, but they truly are. Out of all the brands I've seen out there, they're fantastic. Here's a non-alcoholic beer that we're not involved with yet, but I think somewhere down the line we will invest, is Best Day Brewing. Their product, hands down, beats anything Athletic puts out from a taste perspective. Oh yeah,
Wow.
kills them. Kills them.
Okay. Because
Yeah,
I
they're
actually I love
fantastic.
Athletic Brewing. I think they have some really, really good stuff. So I'll have to check that out. What's it called again?
It's called Best Day.
Best Day.
and
Okay.
they're
I'll
and
have to
they're
check it out.
so where Athletic is, the head and at the top of the Ironman triathlon world, and that's where they got their start. Best Day is now the sponsor for the professional pickleball tour.
Oh, that's where I've seen them. Yep.
Yeah,
Okay.
yeah, and it's fantastic. I mean, it's just a great brand. And the management, the operations of that company are fantastic. We're starting to delve in mezcal. I think mezcal is going to be a huge market as well. So you're seeing some mediocre mezcals out there. You're seeing some lower priced ones that are doing very well. But there's going to be some premium mezcals that are coming out that are in the $150 to $300 range that are going to blow the market away. Right.
Wow.
So
Okay.
I think those are great markets. The canned wine space, holy crap.
That's one, Mike, I know nothing about.
Oh man.
Canned wine is so interesting to me, though, because me and my
Yeah.
wife have this conversation all the time. I've actually been drinking a lot less over the last. Once we have a 1-year-old.
Yeah.
Whenever, as soon as he was born, for whatever reason, something clicked in my head where I'm like, I can't have drinks in the evening if he's gonna wake up all night. Like I just had a couple of those nights where I was so exhausted. I'm like, I'm gonna cut. So I've actually drank a lot less over the last year. But so when we do have wine, though, I mean, it's obviously for two people, it's very easy to each have 2 glasses and you finish a bottle.
Sure.
But we've always said like it's the one form of alcohol that's so interesting where like you have to cork it, and then technically it's usually only good for a couple days. Like it always forces you to just finish a bottle. And we've always said like a single serve or some way to have like a multi-serve wine. There's probably a good reason why it hasn't been done, but it's always been an obvious one to me of I cannot imagine we're in the minority here of being like, wait, why the hell do we have to finish this nice bottle because it's going to not be as good in a couple days?
I love this space because I grew up in the wine space. Okay.
Right. Okay. Yeah.
My dad and Robert Mondavi were buddies, and
Cool.
yeah. So Paul Masson and the Wente brothers, the Jamaras, like these were families we hung out with when I was a kid. And I'm not saying that to brag. I'm just like, we were nobodies. My dad was just a buyer. They would have us up, but I got very familiar in the wine, in the wine space, and I love wine. I collect it. I just got back from Paris, and I was in Chablis and Burgundy for a week
Wow.
last week, and I got to taste and sample and buy some of the finest wines in the world from there because I know the vintners and I know the owners. And I will tell you, wine is it's very hard to perfect in a can. Okay, very
Okay.
very difficult. And the reason why it hasn't been done is because everybody who's tried it sucks at it.
Oh, okay.
They put terrible juice in it. They haven't figured out how to can it properly, and they just it's one of those things where most people who drink a lot of wine or collect wine, they're snobs. Okay, I'm
Sure.
just gonna
Sure.
say it. Like
Yeah.
I was
Right.
one too. I was like, I'm never drinking wine out of a can, right? Or when what was that that one that you peel the
Oh
top of?
yeah. It was almost like a goblet.
Yeah. It was on Shark Tank. Can't remember what the name of it is. It's that bad. Like it's that bad that I don't remember the name of it, and I see it in airports all the time.
Yeah, I know you're talking about.
Yeah, you know which one. So most people haven't figured out how to do it. Well, in the last couple of years, there's been a couple companies that have figured out how to do it. One company in particular named Maker Wines. They're up in the Bay Area. These three ladies have figured out how to do it in a way where you get super high quality wines at a very, very nice price point, and the wines keep. And what's great is they're single serving. Like, I mean, I keep 30 or 40 of them around at all times because I might just want to have one glass. And
Okay.
they've got
Yeah.
everything from bubbly to to cabs, to shards, to you name it. But what's unique is they have figured out how to go to the small wineries where they can't get big distribution with the Gallows and all in the Southerns and all these guys, and they're actually canning the wine on premise right there, and they're getting their best juice.
Oh,
Right?
wow. Okay.
They're not taking the blends and the crappy stuff and the stuff that's left over. They're actually driving a machine there. They're canning it on the spot, and the wine is as fresh as you could imagine, and it is fantastic. And they do this with all small batch wineries, a lot of women-owned, women-led wineries. I mean, it's just a fantastic way to do it, and they're killing it. And they're one of our companies that they know how to operate and will be profitable this year, opposed to many of the other canned wine companies that are struggling, can't get. They might have gotten distribution, but their product tastes like crap. And so every time our product gets on the shelf or Maker's product gets on the shelf, people go back to that and they stop buying the other stuff. Right. So it's been a function where, number one, people have this mindset and opinion that wine doesn't come in a can. Mm-hmm. So you have to educate the consumer. And number two, most people have been putting crappy wine in cans.
Yeah, I would agree. Like even if it looked awesome, I definitely have always had a preconceived notion that it would not taste good. So that has to be a tough overcome. But if you can overcome that, and sampling's tough with alcohol, right? So you probably have to do some
really tough. Yeah, really, really tough. But I mean, equate it to box wine. Like how many times have you gone to the store and you picked up a box of $10 Chardonnay in a giant box, right? You do that for a party where you hate the people that are coming over, but you don't do it, for your finest of guests. I assure you of that, right? But here's what's interesting. At my golf club, I do a lot of tastings. When I'm in Tucson, I live in Tucson and Miami, back and forth a lot. So when I'm in Tucson, I take products to parties that my other members are at, and these people are all they're all pretty wealthy people. They don't have to drink RTDs. They can have a bartender with top shelf stuff sitting at their house pouring all day long. But I bring products all the time to have them try the gins, the vodkas, the tequilas, everything we have. I brought the canned wine. I brought Maker to a party 6 months ago, and by the end of that party, not one bottle of premium stuff was pulled out of a cellar to drink. They were asking me to go back home and pick up more canned wine.
Interesting.
I shit you not.
I mean, that makes sense. And I mean, how many times have we? I'm sure everyone listening, and you and me, Mike, have been at a place where there's just not anything wine related that's available, but it's what you want to drink. And of course, there's beer, there's hard. I mean, it's so obvious to me, especially even because in the hard alcohol space, like the spirits space, there's been a lot of like the mixings and like on the rocks have become popular. So it makes sense that canned wine would be right there. That's a great one.
I mean, think of an airplane, right? Even in first class or business class, right? They're toting these really fine wines. Well, what about the people that are sitting in coach, right?
Right.
And they're pouring them this $2 chuck that tastes like crap, right? Wouldn't you rather have a single serving that didn't come out of another crappy bottle, right? That they could just hand you, and you're like, oh yeah, I'll take a Chardonnay sparkling. Boom, here you go. Oh, I'd like a Cabernet. Boom, here you go. Right?
Yeah, it makes a ton of sense.
It makes all the sense in the world. And so, subsequently, we're taking that product to a lot of airlines right now, and we're on the verge of launching in a couple airlines. Not only just in the the lower level cabins. They're going into business and first, because a lot of people up there as well. They serve usually a blend, a Pinot, in a cup. But you can take these cans. You can have 10 different cans of that stuff and offer way more offerings to even your first class or business people. And
it makes so much sense.
Wines, man. They're premium. I can't say enough about Maker. And it's not, again, it's not because we're an investor. It's because I've tasted all the other crap out there.
Well, and it's cool that you can be passionate about the brands that you're investing in because you actually like them. You actually believe in them. There's I mean, you can feel, I can feel that. I can sense that. That makes a ton of sense.
Yeah. They're great operators. And again, all of our brands, we don't have them if they can't operate. And so it makes it a lot easier. for
Yeah, that
us.
makes sense. That makes sense, Mike. I want to make sure I'm cognizant of your time because I know you're a busy man, and I booked an hour with you. So,
I'm
Mike,
good.
the last question, last couple
Yeah.
questions I really love to ask. One, for you, you're doing so much. Like again, if you look at, I'll put in the show notes, but if you look at Mike's LinkedIn, like Mike, you're involved in so many things currently.
Yeah.
What does Mike Warren use on a daily basis when you think about, I don't know if you're a big picture guy, whether you have annual goals all the way down to what does Mike have to get done today? What tools does Mike Warren put him around himself, whether it's a pen and paper, an app, just what do you use to get shit done?
So many years ago, before I started teaching, um, I was really interested in the org behavioral side of things, which is why I started coaching people. I really wanted to understand how people operate, right? How they use emotional intelligence, how they use their IQ opposed to their EQ, how they process information, whether they follow their biorhythms or they wake up every morning at 4 a.m. and get stuff done, right? Everybody's different. So I read this book by David Rock called Your Brain at Work.
Mm,
And I read this in grad school, and I read this in the first month that I was there. And at the time, I was married, and if anybody knows me, they know that I can hold court in a conversation pretty well for long periods of time. I'm sure your listeners are like, I wish this guy would shut up.
no,
So,
you're delivering lots of knowledge. I love
all
this.
right, cool. So I read this book, and I was in Malibu going to school at Pepperdine at the time, and we would stay weekends up there. And after I read this book, I literally figured out that everything I had done in my life, I had done backwards. Everything. And I it made me sad, honestly. Like it hurt because I figured, man, I could have exited way better than I did in some deals. I could have handled this conversation differently with somebody. I could have handled this relationship. Like everything I did, like I set it up backwards. And I was like, fuck, man, really? Is this what I did in my life? And so I went home and I was silent for like 3 days. And my wife at the
Okay.
time finally, and she's a very introverted person. And so, she could go days without, having a lot of conversation. And finally at about day 3, she walked into my office and she said, "Are you okay?" And I said, "Not really." She's like, "Did they brainwash you? Did you join a cult? Like, what happened? Like, this is not you. You're the guy who's, you've got all this energy and you only sleep like 4 hours a night. You got all this shit going on." And I just looked at her and I was like, I think I fucked my life up. I think I could have done things so differently and so much better. And I'd be in such a different place right now. And she said, "What happened?" And I said, "Well, I read a book that was all about the setup, setting yourself up for failure, setting yourself up for success, setting yourself up for, mediocrity, setting yourself up for everything, and how you process and basically how your brain works." And so, Rock's book, it changed my life. It helped
Hmm.
me understand how to prioritize things and know what's important, and whether you're a list maker or not, to set some disciplined rules around what needs to be accomplished, and that accomplishing the hardest things first in your day will set you up for success, because you will have the brain energy and power to handle the less tough things because they don't require as much brain energy. So I inherently became infatuated with brain science, understanding how my brain worked, my client's brain worked. And it's how I go about picking a lot of our brands. I
Okay.
want to
Wow.
understand how they set themselves up, their day, their company, the books, distribution, the marketing. So how I do it personally, I spend the night before figuring out what my next day looks like, and I'm trying to tackle the hardest things first, so that as I get towards the end of the day, knowing that I'm now, in my mid 50s, I don't have the brain capacity that I did when I was in my 20s or 30s. And I know that I have to work within the 6 inches of my ears much differently than I did 10 years ago or even 5 years ago. So, the moral of this story, Shane, it's all about the setup. You're either going to set yourself up for success or you're going to set yourself up for failure. So procrastination is a setup for failure. Not knowing what is going to be on your books for the next week or 2 or 3 is setting yourself up for failure. So I try not to do that. My calendar is open for all of my partners to see all the way out for the next year. So they know, am I in a meeting with a brand? Am I in a meeting with an investor? Am I in a meeting with, my priest, whoever? They know exactly where I'm at so that they know that I'm set up to try and accomplish at least 2 or 3 hard things a day. Because you're going to have a list of 10 or 20 or 50 or 100. You're not going to get to them.
Right.
But if you
right.
prioritize your hardest things earliest in the day when you have the most amount of brain power and energy, that's a good recipe for success, in my opinion. And that's what I try and do.
I love that. And to do that, do you kind of like live in your calendar? Is your calendar kind of like your to-do list and planning, or do you have like
100%.
other lists and things? Yeah.
No, my calendar is my life. I live by that calendar. I have things planned out all the way until right now. I've got things planned out until October of 25.
Wow. Okay. Like all sorts of stuff, business stuff, life stuff, all sorts of things.
Yep.
Very good. I like that. I know it's funny. I this year, I'm sure you do. Have you heard of Rob Deerdeck?
Of course.
Have you heard about his like crazy life design tracking he does?
No, but I love how good he is on a skateboard. And when Chanel was on the show looking good, that was fun to watch too. But
you should look into it. He's kind of gotten me into this. His CMO was one of my colleagues at our X Bar. So I've had, not Rob, but I've had this CMO on this podcast. And this year I've like really leaned into my calendar and I have everything on there. And so like every day, essentially, I have since the start of the year, I can tell you like how many hours I spent on Noble Partners, how much I spent with my family, how much I've spent in the gym. I can tell you like everything, and I have it all like charted out.
Yep.
And I don't say that to say like I'm like some weirdo keeping track of everything. It's just very eye-opening to show you like what you think you're spending the time on and then what you actually are.
Yeah.
And so I think it's a really cool thing you just said. I use that and then a combination. I just use this planner called the Full Focus Planner. And it's funny. You're like the third or fourth person in a row that's done a similar process. Like basically every night I plan out my big 3 for tomorrow. And that's from the big 3 from the week. And then that all mirrors up to my annual goals. And it's funny, like that concept is so simple, but I look at so many friends and family even, and I'll kind of ask similar questions. And they're just kind of like, you can tell they're just getting up and reacting. And it's different when you talk to people who have a plan and have a few big things they want to get done every single day. And I always say like, it doesn't sound like rocket science, but at the end of a week, whether it's you worked Monday through Friday or you work the weekend, like you have, 15 or 21 major things you got done. You do that over 52 weeks and you do that over years, like you're going to be way farther ahead than someone who's not.
Yeah. And listen, here's the other thing that I tell people, and because again, I've coached a lot of, C-level executives in some pretty big places over the years. And the one thing that you can't substitute anything for this is discipline. I mean, it comes down to discipline. And listen, I'll be the first one to admit on your show or in life, I struggle with some things. I tell myself I want to get to the gym every day. I want to go swimming. I want to go do something. But you know what? I don't. Okay. I just don't. And things get in the way, right? And that's life. So you have to plan downtime just as much as you got to plan uptime. You got to plan to give yourself a break, mentally, emotionally, psychologically, especially when you don't get something done. You have to kind of give yourself a break and forgive yourself too. So, the people that are super highly successful, they're insanely motivated to be disciplined. They're not motivated just to get the job done. They're motivated just to get to that place where they start the process and get through it, right? It's the most successful people are not the smartest ones.
Right.
They're
I'm
the
with
most
you.
emotionally intelligent ones either. Far from anyone would tell you. They're the people that day in and day out get up no matter what, and they show up.
Yeah.
They show
What
up, good, bad, or indifferent. They show
a,
up.
a saying I have on my desk that I love. It's better to be consistently good versus occasionally great.
Yeah,
And I
true.
think that's so true, right? It's like just getting up, giving it more at bats every day is going to be a lot more important. But I like that piece about giving yourself a break that's something I need to work on in planning downtime. That's something I definitely am not good at.
We all do, man. The thing about being consistent, right? You can be consistently consistent, or you can be consistently inconsistent. Okay, one is 50-50 is good. The other one is definitely 100% bad. Right?
Right. Yep.
So you can be consistently good, or consistently bad, or consistently inconsistent. Okay.
Very true.
The people who are consistently inconsistent, that's where trust is built. And it's also where trust is broken.
Mm-hmm.
So if you're consistently inconsistent, people will trust that you're inconsistent, but they won't trust you in a good way. So you got to really figure out, do I want to be consistently good, or do I want to be consistently inconsistent? Because all the other alternatives are shit.
That's a really good point. Yeah, that's facts. Yeah, I love that.
Yeah. So I try to be consistently good, but listen, I'm human and I fuck up sometimes, and
Sure, we all do.
we all make mistakes, and and I'm smart enough now at my age, I know to give myself a break, but I'm accountable, to a lot of people. I'm accountable to my GPs. I'm accountable to my investors. I'm accountable to my brands. And, I can honestly say, like, I try to do the best I can 99.9% of the time, but I still fall short sometimes. And you got to be able to accept that and deal with it. But the one thing I try to be is consistently good all the time. I
Love
mean, that's,
that.
yeah.
Well, thank you, Mike. That's a good piece to end on. The last thing I want you to make sure you plug in is just anyone listening that wants to learn more about you or wants to get involved, or even maybe pitch a brand, which you probably don't need more inbound of. What's the best?
Now.
Yeah, what's the best way to follow Mike?
You can go on to alethiavp.com is one way. You can go to my LinkedIn. I'm easy to find. Mike Warren, Alethia. I've got another website, asbizsolutions.com. My phone number is readily and easily listed, which doesn't deter people at all. So, I get texts and emails and phone calls, in the middle of the night from all over the place. So, like I said, when you and I were talking offline, Alethia means the truth, and it's all about transparency. So, I try not to hide. I know a lot of fund managers do, and they bury themselves in in lots and lots of email chains, or they don't list themselves. I'm not like that at all.
Okay, that's great. Yeah. No, I respect that. I could see how that could be easy to do. I'm sure you got a lot of inbound, so to be out there and transparent, that's big, Mike. I'll add all that to the show notes.
Cool.
Thank you. I can't thank you enough for coming on the show. It was great to meet you. Great to learn more about what you're doing, and I feel like I learned a shit ton today. So
cool, man.
Thank you, Mike. I really appreciate it.
I appreciate you, and I appreciate your time, and thank you very much for having me on, man. It's been awesome. Thanks.
Awesome. We'll stay in touch.
Okay, cool.